The thought process I had in mind was, if you are going to build a company in app layer, infrastructure layer, otherwise, how VCs look at it, what are the interesting spaces for us? Two is, how do VCs evaluate SaaS companies? So when you're saying how to build it, like keeping what things to keep in mind. And then finally, how do you build moats for your company? So that's the thought process I have to share. So first of all, a little bit about Accel. So Accel is famous for obviously in this conference. We were the first investors in Freshworks. We invested in Freshworks when they had 70-odd customers. And then we continued to partner with Freshworks all the way till just the pre-IPO round. And now Freshworks is a great example. 13 years ago, nobody believed Indian SaaS companies could become big. And Freshworks is now over $600 million in ARR. And we are hoping more and more such companies to come from India, and that's what Accel's charter is. So we have been investing for over 40 years. Accel started investing way back a long time ago in San Francisco in the Valley, and now we have 3 offices, and we are a truly global firm. So the idea is once we invest in a company from India, we help them cross the bridge, cross the chasm from India to the global markets, be it Europe or be it US. We have been very active in AI. We have invested in over 27 companies in the last couple of years. And out of these, generative AI would be like 20+ companies, right? Just if you were thinking like, so that's the difference. And as you can see, they are split across variety of use cases, healthcare, education, coding. They are in industry use cases. They are the office of the CFO and things like that, right? So it just actually, I think in the morning, Anand did a session on how many people were using AI. If you are not using AI, if you don't intend to put AI into your product, I think it's a disservice to yourself. Customers today don't buy unless you have AI in the product, right? That's and even if you think your customer does not need AI, there is some other competitor who's going to go and sell the AI strategy to the customer, and it will be very hard for you to go and say, hey, I don't have an AI product for you, right? And you will lose out on sales. So I think it's fairly one piece of advice if I would make is just have AI and market your AI in the product to customers. I also want to talk a little bit about Accel Atoms. So Accel Atoms, the program, is a very early stage pre-seed program which we do when you're starting off, where we write up to $1 million check into the company. We like to help companies get their first few customers, design partners. I think that's the biggest thing which we can do for a company right in the beginning to get you feedback. But even more so, the biggest important thing which we do is you get access to the Accel portfolio founders. The portfolio where you have Girish, it's like a WhatsApp group. It's like events which we do where you have access to all the CXOs and VPs of various companies which we have invested in, and you learn from the best. Not just VC Gyan, you actually get to know how to do things. I think that's where, so we're going to open that up in a month or so again for applications. So yeah, just be on the watch out for that. Okay, so what to build for AI? So this is the money slide, and I'll walk you through it over the next. So these are the spaces which are of interest to us. So you saw a lot of very specific examples in the previous presentation, but the intent is we look at the whole space into 3 different buckets, into the application layer, infrastructure layer, and the foundational layer. And the application layer is all about apps, like the end customer using the apps. The infrastructure layer is the tooling which allows product managers and developers to help build these apps, and the foundational layer is like your LLM models and as such, right? Now, if you take a look at how this is set up, the framework is essentially an inverted pyramid. And the way to think about this is, at the bottom end, you have AI builders. This is the foundational layer in which very few companies, like less than 100 companies in the world, exist, right? So you have OpenAI, you have Anthropic, you have a bunch of these, which is the large language models where a lot of heavy capex has gone. And there are like some less than 100 companies. It used to be, last year, it used to be tens of companies. Now it's maybe 50-odd companies. And this is very research-oriented. You need to have people like research teams inside your research professors, hardcore AI researchers inside your team to be able to differentiate your product from everybody else. And that's what VCs also look for, by the way, like if you're building in that particular space, right? Then you have the picks and shovels. Like this is your LLM ops, DevOps. This is all sorts of products like Portkey is an example from India, which is building for infrastructure layer, right? At that point of time, these number of companies comes out to be hundreds of companies, right? Because it's slightly easier to build, and the customer is less nuanced, right? When you're using a foundational layer model, people are very nuanced about, oh, the output is not very perfect, so I need to move to some other model. But in this case, your relaxability of conditions is easier. Like you can just choose some other use case and you can move to some other particular model and it is fine. And then finally, you have the AI users or the application layer. The application layer has both B2C and B2B apps, and these are tens of thousands of apps. And majority of companies from India typically end up building in this particular layer. The challenge with that is obviously because these are tens and thousands of companies, how do you differentiate becomes very difficult. So how do you stand out from the crowd becomes much more difficult. The customer gets bombarded. Typically at any point of time, the customer has a choice between 10 to 20 companies and 20 different products, and that's where the difficulty is. But to be honest, that's where the money is also, right? See, the customer does not care about the bottom two layers. The end customer does not care whether you are using OpenAI or Anthropic. He cares about, hey, did my problem get solved or not? So as long as you can deliver that value to them at the app layer, then everything else flows from there. But if you see, the VC investments are majorly happening at the bottom. And the reason for that is because VCs, all of us believe that at the end of the day, a monopoly is going to get created or a duopoly is going to get created. Few large models will dominate everything. And that's why the majority of companies are getting in that space hundreds and millions of dollars, or billions of dollars essentially. Having said that, the app layer is where majority of the money sits in the future, right? So everybody will pay the Google tax, the OpenAI tax in the future, the AWS tax, which all of us pay. But a large set of companies will get built at the top as well. And to be honest, that's where a lot of you should be building as also. But one problem which I have seen across a lot of Indian founders, and this is just my honest feedback, is when founders start talking to VCs, they start talking about, hey, this is what I've built because this is the problem for today, and this is how I'm solving for it. But that doesn't solve, that's not what you should be pitching. You should be pitching is, hey, 5 years from now, this is how the world is going to look like. I have thought about these different kind of problems because this is what I have been thinking about. This is other VCs thinking about. The founder is pitching this idea today to me, but how does it stand the test of time 5 years from now, right? And that is what a founder should also think when they are talking to a VC. Don't talk about, hey, this is how I built it. This is the problem statement of my customer. This is why it needs to be solved. And this is a very profitable problem to be solved, and that's why I'm building it. So that's the first part of your pitch. And the second part of the pitch is, if I solve it, this is how it will look like 5 years from now, because I will have dominated the world, or the world is changing and I'm building for that. So that's the second part of the pitch. I think those two things are fairly important to communicate and also to think through when you are building your own business, essentially, right? Yeah, so this is the meat of the presentation. So design choices for building an AI business, right? And there are 3 things when you are building a business which you should be think about, right? So profitability, right? The problem which you're building, is it going to be profitable or not? Right? Positioning, right? So you have incumbents which are going to build, like for example, if you're going to build another chatbot software, you have tens of these companies which were funded in the last era of chatbots. How are you going to compete against them? And then how are you going to win against other startups which are fresh and new, right? So that's the second positioning part which you have to think through, and that is where right at the beginning when you are doing 0 to 1, it's very hard for a founder to think through. Third is, what is your moat, right? So you have tech moat, you have a product moat, and you have a data moat. These are the 3 moats which I believe any company has, and you have thought through enough of that. So for the longest period of time, Indian startups were not very good at the second mode, which is the product mode. The UI workflows were not matching up to US. Thankfully now we have done a great job of that. However, most of the companies don't have access to data, right? So there we have seen very interesting use cases where, very interesting strategies where people have tied up with Western providers of data, because we are sitting in India and we can leverage human labor force in India and try to label data for that. And you get exclusive access to that data, which allows you to bring about a differentiated strategy for building products, right? So that, I think, is very important. So these are 3 design choices which you need to think through. For a VC, there's a 4th thing which gets added, which is it a large enough market or not, right? So that's the other part. Now let's look at profitability from a first set of principles, right? If you are building a typical SaaS product, customers paying you $100, you're going to spend money on AWS, you're going to spend money on customer support, customer success, and you will end up with an 80% gross margin. But now here's the question, right? If you're now going to use an OpenAI, if you're going to use some sort of any kind of AI essentially in this, there's a significant drop in profit because you're going to call APIs, it's additional cost, and then you need to have like hire extra team members to manage that stack of LLMOps. So here's the question, like should an AI company be valued higher or lesser than a SaaS company because it has lower gross profits? So raise of hands. How many of you think a AI company should be valued higher than a SaaS company? Okay, 1, 2. Okay, now if you have given a choice, I give you $100 and you say, okay, go invest in the software market, in the stock market, and there's one company which has 80% gross margin, another company has 50% gross margin, same amount of revenue, then which one will you value higher, right? So today, why are AI companies getting valued much higher? The reason for that is everybody believes the growth of those AI companies is going to be much, much higher. But in 10 years' time, when all companies will have the same amount of AI in them, and gross margins are going to shrink because of AI, you will see that the valuations of those companies are going to go down. That's my controversial statement here. So today, everybody is investing because it's a gold rush. Right? But you as a founder need to think about your own profitability. So don't build for the market. First, think about it from first principles for yourself. So will the customer is going to pay more, right? The customer is not, just because AI has come in the world, has our life changed because I have suddenly a lot more money than I was earning 1 year ago? No, right? Same, right? So does the customer, the economy suddenly improve significantly because there is a lot of AI? No, right? So customer is not suddenly going to, maybe in the long term, yes, higher productivity, but then we'll have job losses. So what will happen to that, right? So is there going to be less consumer demand? So you have to think through that, right? So customer is not paying you because you have an AI product, he's going to pay you $100, $120, $130. He still has only that capacity to pay, unless you are able to go and convince them, hey, because of this product, you can fire 5 people, and then you have cost savings. I mean, firing 5 people, unfortunately, is the most straightforward use case of AI. And then you have more money so you pay me more money, right? So AI builders are charging very high, and you have spends. So now what do you do? So option is to move to open source AI. When you move to open source AI, what happens? You are not paying any more money to the open AIs, and then you bring that whole stack in-house. You bring that stack in-house into your org. And at that point of time, you have to have very good LLM ops team, which is going to manage all of this, right? So you need a research team which can drive value out of it, all of that. Right? So what is the answer, right? So essentially the idea is to figure out how customers pays more. Only then you can defend your gross margin. Now there are only 2 ways which I have seen. One is you're solving something where completely new use case, nobody else has seen that before. The customer does not even know what to pay, right? Because they haven't seen another chatbot. So let's say you're building something like let's say trip planners, right? Which all of us do. It's a very common use case. Everybody has seen it before. They know if I were planning a 100 rupee trip internationally, then 10 rupees is what I need to pay to the trip planner. So they know pricing for that. So, but what if you give them something which they have not seen before? Then it's very difficult for them to price it. So that is the new use cases, very important to think about. And that's where a little bit of the moat is for the companies, because once you build it, you are successful, competition is going to come. The second is, using AI, you make it 10x better. And then you can say, and 10x better, every VC says 10x better. What is 10x better? 10x better means you can articulate that value in terms of cost savings or efficiency in terms of time to market for the customer. Hey, it was taking you, 1 month, 2 months to do this. Now you can do it in 1 day. And that is so many man hours saved for you so that you can service more customers, or you can improve efficiency, right? And that is where you drive value out of the customer and say, okay, I'll pay you. You saved me 2 months, I'll give you money for like 3 days or 4 days to you, right? So that is the value proposition you need to tell, and only then the customers will pay you more. By the way, I travel a lot, and last year, a lot of AI sales happened because a lot of the customers were being asked by the board members as to what is your AI strategy. So customers was just buying stuff from all vendors who they can get hand on. This year, a lot of CIOs are now asking questions. We spent a couple of $1 million last year. What is the value to us? And so now you have to actually communicate that value to the CIOs, to the CEOs, using that, hey, I'm saving you cost or time or people or efficiently making your outputs much better. I think that value selling has to be done by all founders. Okay, so what VCs look for in an AI company, right? So we want you to be tall, dark, handsome, ready, make a lot of money, everything, right? But this is in a for most of you here, which are early stage companies in India, I think this is what matters most. So growth, I think this is, founders when they take money from VCs don't understand what VCs do, right? Once you take money from us, we want you to run like you're running a 100-meter dash and you're going to win. And you can't, a marathon, we want you to run a marathon like a 100-meter dash, right? So you can't stop, you're constantly on steroid and you're running. That's what, so growth is the most important metric. If nothing else is working in the company, but growth is happening, you'll still get funded, right? And that's why a lot of times you see these head-scratching funding which is happening across, hey, the company is losing money, but why are VCs giving it more money? Because growth is happening. Growth basically means that customers love the product, customers are willing to take it, and they are just eating up the entire market share and not letting anybody else come in, and then they'll figure out profitability later. So that's what growth means, right? Focus. A lot of times, and this is a slightly very early stage, everybody is very smart. They can solve 10,000 problems. So founders get defocused as to what should I solve right now? And you can call it prioritization or whatnot, but there are 3 different directions you can take. And can the team articulate and say, this is what I'm solving, why am I solving? Just can they pass the 5 why test? Why am I doing this? Why now? Why me, who is going to win this particular thing? And among the all different 4, 5 choices, why this particular thing I need to focus on? That becomes very important for a very, very early stage company in the beginning. Team with an AI edge, take it with a pinch of salt. Now AI is becoming easier and easier to use. So I think gone are the days where people were looking for somebody who was like an AI researcher in the team. If you were in the app layer, I think it's become easier. But you still need to have understanding and grounding of, okay, how to do fine-tuning, how to use data sets. Because if you don't know, like there'll be somebody else who can understand it better, right? And Harvey.ai is a very good example. They use OpenAI, and they work with OpenAI to create fine-tuned stuff for their app, and they are like $1 billion company. Whether they have revenues or not, I don't know. But it's a good example where team which is not necessarily super AI savvy can build a large product which customers use. So finding the right customers is important, but having a team with AI edge, as long as you have understanding, that's great. If you have, that will be a real plus. Customer love. So I don't know if you guys know, the unwritten rule in startups is once you have revenues, then it's much harder to raise. Right? Because then we can ask you questions like, okay, what kind of customers you have? Do you have customer retention or not? What is the ACV like? Why are you selling in India? Why not in the US? Why did this customer leave? It's easier to raise when you have no revenues, but once you have revenues, it's a very good proof point, because then you can show high customer NPS, you can show customer churn. I think those are things which everybody looks like. And how does it translate when you go to fundraise? So you come and pitch, we like the idea, then I will ask my team members, hey, let's go and talk to like 15 customers of this company and see what they say. And 15 customers, typically what founders do is they find the best customers to talk to us. But then, when the customers talk, what ends up happening, some customers say, I like this company because the founders are very nice. Or I like this company because the customer support was great. Or I like this company because the product pricing was low. Or I like this company because I found them through some friend and he highly recommended them. The problem with those kind of statements are, they are very disparate statements. You can't come to a common conclusion about the product and the company. And then it's like, hey, it doesn't seem like it's getting a clear picture why this company is going to become a big company. Because there's no superpower this company has which every customer can agree upon that this is why this company is great. And then that is a problem. right? So even though you might have 15 great customers, but if they can't articulate that very clearly why they like your product versus your competition, that it's a big problem. So you need to make sure that your customers who are champions have high NPS, high product engagement, and can also articulate why they like you versus the product. Like we as VCs care about this all the time. Like the founder should be able to articulate why they like Accel versus other VC firms. Otherwise, you will not be able to tell your other founders that why we should go to Accel, because then like, hey, yeah, everybody gives money and whoever you can get it from, right? So same thing for founders as well. Hey, this product was also great. Like any other product which can do the same thing, I'll take it, right? It should be why this particular product is great amongst others that the customer should be able to articulate. GTM understanding, I think this is a very hard, tricky bit for a lot of us here. Most of the people are engineers. They don't know how to sell in the US. You typically gravitate towards selling. The first few sales are always to friends and family. Then you go to LinkedIn and ping people over there and try to sell. And in the beginning, there's a lot of confusion. Should you do SEO? Should you do SEM? Should you do, hire a guy in the US? Should you hire consultants? My advice is twofold. First is the first 10 to 50 customers will come through the founders. You need to understand what customers like, how to sell them, how to price. Unless until you understand that, you'll never be able to reliably trust your sales team. You'll never understand their challenges, and you'll always be changing your sales heads all the time. Second is, don't try to do too much. In the very beginning of the company, you'll have to make a call, whether you're focused on organic or SEM or your influencers, whichever GTM strategy you want to apply, take that one strategy, run with it for 6 months, 7 months, unless you understand perfectly how to run that strategy. Otherwise, there'll be a lot of confusion going forward. Moats, we already discussed there are 3 types of moats, but a lot of Indian founders typically try to sell with pricing, and it's not a great idea. I'll give you an example of one of my companies. So they were winning one deal after the other. And they were very happy to report in the board that, hey, we are winning against this huge unicorn company which is public in the US markets. Every deal we enter, we win. So like, okay, what's your pricing? So like, we're charging $5,000 for the whole year, 5,000 ACV. Like, what's the competitor pricing? And the competitor pricing was $150,000 for the whole year, right? So obviously, they will win every deal they enter. So I said, boss, there's a very big gap. Why don't you increase your pricing from 5,000 to, let's say, 30,000? So they said, no, it doesn't make any sense. So they went from 5,000 to 30,000 up, because as a board member, I said, no, you have to do it. So they did it for 2 months. They started losing 70% of the deals, because customers started asking these questions. Okay, where is your certification? You don't have this feature. You don't have that feature. Then suddenly went back to that. And then the founder was very afraid. So I was like, dude, you are getting customer feedback. The customer is saying, I'll pay you more if you give me all these things, right? Till now, you were getting the bad customers. Now the good customers are asking you good questions. This is the time for you to step up, right? And sell better, right? So I think you need to really but you need to understand your competitors' pricing very well. So I think that is very important. So these 2 things go hand in hand, and I really request you guys, when you start selling, keep on increasing the price of your product till you see that now you're losing 80% of deals. 20% win rate is a very good win rate, by the way, right? And then after that, you start adding products so that you increase the win rate. So don't win because of price. That's one part. Having said that, now data I already mentioned. Workflows are super important. Integrations with as many products are super important, but they take a lot of time, right? So in the beginning, don't get sidetracked by the fact that, hey, I am building, again, so I am taking CFO example for the AI because very front and center for me right now. You have, let's say, a NetSuite you want to integrate into, you have a Tally to integrate into, then you will have using Excel or some Oracle system like that. So you have 20 systems to integrate into. Versus you say, okay, I will only go after those customers who use a data warehouse, one simple integration, and then I can derive and show value to the customer very quickly. It might reduce the number of customers you can go after in the beginning, but it helps you make the product much faster, get more customers, get more customer feedback faster, and get to the fact that you're building something which customers need. I think that is super important. So don't try to do integrations right in the beginning. integration mode comes later, right? Uh, yeah, we already discussed revenues. Okay, so I showed you a laundry list, but all of that you can put fundamentally into two things. In the beginning, when you're pre-seed, when you're raising, let's say, $1 million, your first $1 million, or even your first $5-6 million, people typically care about these two things. Can it be big? Because once you go for a VC, any VC, they will looking for at least $1 billion to $2 billion, $3 billion outcome. And how can it get to that number very fast, right? So to give you some sense, most VCs in India are 10 to 13 year firms. So they need to make money in 10 to 13 years and come out, including Accel, right? So that's the time frame. And as all of us know, it takes a lot longer than that to build a very large, successful business, right? So there's a misalignment, but that's the way the VC business is, right? So these are examples of some of the fastest companies. Every VC wants to invest in any one of these companies, right? Hey, I want to invest like Wiz. If a VC makes their career by investing in one of these companies, that's it. So even though you might get a lot of rejections from VCs, there might not be any problem in your pitch, in your idea, in your thing, but it's simply because VC is looking for this objective function. Can your company be like this? That's what they want, right? So how big should your TAM be? Like, this is a question which people don't know, so this is the maths behind it. Like, most VCs are, and this is like, just think about your stock market example. This is maths. This is not rocket science. So most VCs are looking for $1 billion outcome, right? Average SaaS multiple is like a 7x. So you get like 150 million revenue. So your company needs to get to 150 million revenue, right? And at that point of time, you will do a public market IPO at $1 billion, okay? But somebody at that public market is going to invest in your company. So why would they invest? When I invest in stock market, I want like a 15 to 20% CAGR on my return, right? So that public market investor is also looking for that. So they are looking for a 20% return, which basically means in 4 years, your revenue needs to get to 300 million revenue. So when they invest in, when the public market invests, because the VC gets an exit at that point of time, okay? So they will require a public market investor to invest in your company at that point in time. So to create a successful IPOable company, we're looking for a 300 million revenue possibility in 10 years. Because VC wants to exit in 10 years. So your company needs to get to 300 million revenue in 10 years, right? So assuming you can get to 10% market share, your market should be $3 billion at that point of time. And if your market is growing at 20%, then a 500 million revenue market right now is okay. Right? That's the VC maths when you put up the TAM slides. A lot of people put up the TAM slides from Gartner or somewhere else or McKinsey slides. But what is the VC looking in it is that. Right? Look, your segment of revenue, is it 500 billion or more today? And that is growing or not. Right? So that is what we're looking for. And then the growth rule. Again, I'm very surprised a lot of people don't know this. But this is a heuristic which is VCs look at. Once you get to 2 million revenue, you're expected to grow triple, double. So 2 million into 3, 6 million, 6 million into 3, 18 million, 18 million into 2, 36, 36 into 2, 72, 72 into 2. What did I get wrong? I did 3 triples, sorry. 3 triples and doubles, right? So that's $108 million. That's where you end up at. Now the great thing is I have founders who have taken money from me and I've told them this and they come back and said, Prayank, thank you. First year we'll do 3. Second year we will do 1. Second year, so they will grow 100%, 100%. They have a hard time raising capital. And this is I'm just telling you, this is very difficult to do. Growing 300% 1 year, then 300% another year, then 300% another year is just like super hard. 3 triples and 2 doubles is very, very hard, right? So, but when you raise money from a VC, that is the expectation. Right? So imagine if your team grows like this. You start off with 200 people, like the 10 people team. By the end of 5 years, you will be a 1,000 people team. And you have to manage that team. Right? So that is the intent. And that's why as leaders, as founders and CEOs, you need to have a mentality, what VC is called learnability. Okay, what I know today won't work tomorrow. I need to figure out how to make this happen, how to grow very fast, how to have the right set of team members, and all of that. So that is what is going on in the VC's mind when you're meeting them, right? So yeah, but this is like the golden rule. Like if your company is doing this, like you will get money like no tomorrow in public markets or private markets. Uh, this is a SaaS checklist I had created for my companies. If you're pre-revenue, people typically look at team and market size. Once you get to $1 million in ARR, the questions which are asked from you keep on increasing because you're going to raise more and more capital, right? So that is why you need to take care of this. But in the beginning, just think of having a kick-ass team, having a great market size, and which problem which you're solving for. So choose the problem very correctly. A lot of times people start building without actually talking to customers, whether they really need it or not. So please solve for that. In AI, moat building happens every few months. So when you're in pre-PMF stage, it's okay to build a GPT wrapper. Like you are trying to figure out whether customers actually will pay you money for that or not, right? So you need to validate. The biggest important thing is customer value, and the customer is going to adopt it or not. I think that is a supremely important thing. As you go forward, then you can have fine-tuned models. Then you can have your own pre-trained model. Once you have more money, all of that is great. Unfortunately, one thing which is table stake is people always want regulatory compliance, security, and responsible AI. You should not be giving out false answers. You should not be hallucinating too much. I think that is a lot of investment which takes right in the beginning for all AI companies. So this is my slide deck. And then please, we have Accel Atoms, and Seed to Scale, where we talk decoding AI, where we talk a lot about AI, our AI thought process. So please feel free to engage with us on that, and I'll be around. I can take some more questions? Okay, 1 or 2 questions, yes. I'll leave this on for you guys. Any questions? Yeah.
So you talked a little bit about pricing strategy.
Yeah.
So if you look at the history, the legacy products were replaced by SaaS. So the SaaS products came with the subscription model. And how do you think the pricing strategy would change in the AI models?
Yeah, so it's a brilliant question. I think already AI products are changing pricing strategy completely altogether to outcome-based results. So earlier, let's take example of Freshworks, where pricing was based on per seat pricing, right? So now, or per agent pricing. Now what happens once, instead of that, you have AI agents, right, which can run at 1/10 the cost. So Freshworks can't charge you that much money, right? So a new startup can come in and create AI agents and just drop the pricing on that. But people are now coming out with say, hey, what is the AI agent finally supposed to do? Resolve a customer query, right? So what if AI can actually resolve your customer query? You pay me per resolved customer query. So we are already starting to see things like that. Take a reconciliation software. Reconciliation software was, okay, number of users into amount of data you will throw in, and then how you use, because they could not guarantee outcome results. Now we are starting to see reconciliation software, which is basically saying, based on number of records, 100% reconcile, you pay me money on that. Right? So that's the change which is happening. Outcome-based pricing is becoming a norm. How much and how fast it will happen, I don't know the answer. But companies, if you can align your company towards that, like it's great. For the customer, it's like, hey, I'm getting an outcome, then that's why I'm paying for it. Thank you for that question. Yeah.
We'll have this as the last question.
Last question, okay.
Yeah, so you mentioned about the moat. How you judge on the moat? Because today, I'm building something that could be my moat, but since the landscape is changing so fast, if 6 months ago I built an agent, that might be a moat, but today it's like everywhere. So how I can defend that moat, and how would you judge on that as well?
Yeah, no, so moats have different forms and shapes. So you see, typically what ends up happening is founders focus mostly on product maturity, model selection, these 3. Right? Because engineers, right? So this is my technology, I am using OpenAI ke upar, and this is better than others, and all of that. But customer doesn't care about those things, right? So again, the way we judge moat is when we ask the customer, what will it take for you to go away from this particular product? The customer responds XYZ. The customer responds, this usable, if this functionality suddenly gets away from this particular product, then I will not use this, I will go to some other product which has this. I think that's a moat, right? When the customer says, it's so easy to use because it's very intuitive, I can go through workflows, that's a moat, right? Because then, so those are the software aspects. No customer says, I like this because they're using Llama 405B, right? So our judgment of the moat comes from the top, right? From the customer's mouth, right? Okay, this is why they love this. I think that's the answer which we're looking for. So, and that's very hard to articulate actually for a customer. So, yeah, thank you. All right, thank you guys. Thank you.
Thank you so much, Prayank.